Good morning, everyone, and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo. And yes, CJ, I am back finally, Santo. Thank you so much for holding the stead.
I'm so glad to see you back, CJ, because, out of the 15 minutes, I've been speaking for extra 12 minutes every day for the last 4 days.
That's a very understated, subtle jibe that you're making at my talking habits. But let's get on with the show. Well, Santo, it seems like today Infosys is going to make a lot of bears out there eat their words, after the earnings that the company has announced yesterday. If you look at the stock, I think it's clearly going to be a very, very strong day for Infosys. The stock is likely to surge after the company raised its FY23 sales growth guidance once more. The guidance is now around 15 to 16%. So clearly the lower band of the guidance from the previous quarter, that was 14 to 16%, Santo, that has been raised to 15 to 16%. The margin performance, well, everybody was so worried about IT companies' margins, but look at Infosys, Santo. It was ahead of the expectations that the market had clearly. So a lot of analysts got that one wrong. And the most heartening thing for me, Santo, is the fact that if you look at the deal wins, they were the highest in 7 quarters. In a macro environment like today's in Q2, where everybody was so concerned about global recession, people talking about spending cuts happening in the IT sector. Clearly, a deal wins or TCV of about nearly $3 billion in the second quarter, which makes the recent sell-off in the stock appear a bit premature for me.
Well, CJ, yes, the numbers have come as a surprise, but I would slightly qualify that statement which you had made about increasing its guidance. What it has said is kind of set a floor. It has said that it won't fall below 15%. So it's not the same as increasing its guidance. That's half the picture. But that said, CJ, the overall outlook, you can't miss the signals of caution in every management commentary. Very clearly, I think we have now a recession coming in the US and the Europe. There is almost no escaping it, looking at the way things are going. And that said, I wouldn't be too excited about IT stocks at this point in time.
But Santo, he has just said that, they're cautiously optimistic in the conversations that they are having with their deal, with their clients. Clearly, yes, of course, it will be a little, a little ignorant to assume that yes, everything is hunky-dory. You cannot say that in a global environment like today's, when the IMF is saying that there is almost a 25-30% chance of the global economy slipping into recession in the coming months and quarters. So clearly, if you were too optimistic, I think market would have taken it as a wrong signal. So clearly, I think they have been guarded in their commentary, but also indicating that clearly they as a company are still holding on to a very, very good position. Remember, not so long ago, I told you that on the show as well, that after Accenture's earnings, there was a clear indication that Indian IT companies, especially the big ones, were gaining market share out there in the global market. So for me, I think the increase of the floor of the guidance is just a reflection of Indian IT companies probably doing much better than their global peers such as an Accenture or a Capgemini out there.
Well, CJ, even that part you mentioned about margins recurring, now you've seen a similar trend for TCS also, and the general view on the street was that probably in Q1 margins may have bottomed out, and the challenges that these companies were facing on attrition, that is expected to slightly ease going forward. So I don't think there's a big surprise there. We have seen a similar trend for TCS, and TCS too has guided to an improvement in margin. So I would still be a little circumspect.
Santo, what actually, besides, of course, the fundamentals is one place, but if you look at the other aspect of the earnings announcement yesterday, I think that is something that could provide a lot of ammunition to Infosys bulls ahead of whatever, the global storm that you have been warning people about. And that is the buyback that the company has announced, a nearly $1.1 billion share buyback plan at almost 30% premium to the current price of the company. And I think this buyback plan is likely to provide a lot of cushion to the stock. It might set a floor, an intermediate floor for the stock going ahead. And, yes, there could be a little bit of a, a tapering of optimism, because the buyback is an open market buyback and not a tender buyback. And I'm sure you'll be able to explain better than me how that can differentiate, have a different impact. But even in the past, when Infosys has done an open market purchase, Santo, in terms of a buyback, the premiums have tend to sustain quite high. Even in the previous 2 buybacks, the premiums were somewhere around 17% and 25% in terms of the average price at which Infosys bought back the stock from the market. So looking at that, looking at those sort of premiums, I feel going ahead, at least the next 6 months, are going to be quite steady for this company.
Well, there's a big difference here, as you yourself mentioned. Now, this is the difference. Key difference here is that the company is going to make this buyback through the open market route, and it is not committing to buy an X quantum of shares at that price. So there's a big difference there. And typically, what companies do is, even when they announce buyback, of course, they indicate a maximum price, but their endeavor always is to buy shares at the lowest possible price. So it will again, it's not a given that the buyback announcement in itself will push prices higher. Overall, Infosys will continue to track the performance of the IT sector in general. So yes, definitely it will provide a cushion to some extent, but that is not the same as saying that the stock will outperform. Also, you know, repeated buybacks also, this is the fifth buyback in 5 years. That also indicates that probably the company is running out of options to deploy the huge cash that it's throwing up. So that should also be.
Or maybe, Santo, the company is just making too much of a cash that it all probably from a capital allocation standpoint, it just doesn't make that much sense to keep so much cash stashed within the reserves when you don't really have that many acquisition opportunities. I mean, in an environment like that, I think Infosys would probably want to wait another year or two when it can probably go out and acquire more companies, especially in some of the advanced technology front, given that valuation will probably become even more cheaper given the growth fears that are now circulating in the market.
Yeah, I'll agree with you on this one, CJ, because at this point in time, all the factors are in favor of Infosys opening on a very strong note.
Yeah, absolutely. I think
overall market sentiment is positive. The numbers have been slightly better than expected, and then you have the buyback announcement also at a significant premium. Even though it's just an indicative price, the price is at a significant premium to current market price. So these things could really work in favor of Infosys this morning.
Well, glad, Santo, we could agree on something first thing in the morning. That said, let's quickly take a look at the market setup for today. And it is, as you know, as the Infosys stock, the market setup also looks quite strong. If you look at the SGX Nifty, it's indicating almost a 150 to 200 points gap up opening, taking cues from a very strong closing for Wall Street. Well, Wall Street earlier in the day, yesterday, started off on a very, very weak footing after that very surprisingly strong September inflation print, which was ahead of markets' estimate at 8.2%. But after that initial knee-jerk sell-off, we saw a very rapid recovery, and you almost saw a 1,000-point swing on the Dow Jones, Santo, with the Dow Jones and Nasdaq both closing more than 2% higher. Also, US Treasury bonds yields also stumbled after rising initially, inching up higher initially. They did come back quite significantly, and this is largely probably down to the fact that, Santo, the market is now doubling down on the expectation that by March 2023, the Fed will have to initiate a rate cut instead of continue to raise rates.
Well, two things here. One, the market has been trying to outguess the Fed for some time and it's not really worked. Secondly, one swallow does not a summer make. You're going to see a sharp rebound today. Of course, the Dow Jones made a strong comeback yesterday, and that could drive a good amount of short covering in the Indian markets also, because a lot of short positions have been added. That said, if you again notice, the market is moving within the same range. It has not really been able to break outside.
It's like market has not gone anywhere in the 4 days I was absent.
It's on a treadmill at this point in time, and that's how I would put it. And let's not ignore the clouds building up on the global horizon. There things are not at all looking pretty at this point in time, and our own macro indicators to some extent are showing signs of a bit of softness. I would say that still India is better placed compared to the other global economies, but at the same time, if you look at it in absolute terms, there are chinks there also. So there is need for caution at this stage, CJ. It's unlikely that India will outperform global markets by a wide margins should US and Europe tip into a recession.
Yeah, clearly, I think, Santo, today's move will largely be down to positioning. I don't think we can take any sort of certain cues as to which direction the market might head going ahead, because next week also, of course, will be a very earnings heavy week. So therefore, I would caution against reading too much into today's move. You have to wait till the day's end movement and see what cue we can get for Monday and next week. That said, let's quickly move on to some of the stocks that we want to talk about, Santo.
Well, I'll start off with GM Breweries, partly keeping in line with the Friday spirit.
Yeah.
So this is a company which reported its second quarter numbers. This company is into country liquor, and interestingly, CJ, despite the overall weakness in rural consumption, GM Breweries has been able to report strong set of numbers for the second quarter. In fact, for almost 3 quarters in a row now, top line has been in the area of in the vicinity of 140 crores. The most important thing is this time the margin saw a significant improvement. It's usually been around 15-16% for quite some time, but this time margins were above 20%, and given that there's some bit of softening of agri commodity prices, you could further see an improvement in margins going forward. According to Moneycontrol Pro analyst Sachin Pal, there could be an improvement of at least 200 to 300 basis points in operating margins in the coming months. Besides that, we are also in the festive season at this point in time, typically, which is a very strong season for a company like GM Breweries. And lastly, sugarcane crop for in Maharashtra this year is estimated to be around 138 lakh metric tons for the current crushing season. So that is also likely to bring down input prices for molasses, which is the key raw material for GM Breweries. So all in all, and lastly, there is valuations, not to forget that, at about 11 times trailing 12-month earnings, the stock is very attractively placed, CJ.
Well, Santo, clearly no doubt, sequentially, the performance of the company in the second quarter has been quite good. But if you zoom out a little bit and, if you look at the annual trend for, GM Breweries, Santo for the second quarter, it's largely been in par with or in going with what the muted or moderate growth that the company has been posting. Year-on-year increase in revenues were somewhere in the range of about 11 to 12%, which really does not inspire a lot of confidence when there are companies out there, even in the brewery sector or the alcohol beverage sector, which are doing much faster growth rate at this point of time. So for me, I think that in itself is a bit of a downer. Apart from that, yes, sequentially margins have improved, but if you look at year-on-year, the margins were still quite considerably lower compared to the year-ago quarter, and that is largely down to higher raw material price at this point of time. So from a year-on-year perspective, I don't think there would be any margin comfort going ahead into the Q3 and Q4, but probably from next, FY 24 Q1 onwards, you could see a year-on-year improvement in margin for the company. And as far as demand is concerned, yes, Santo, festive sales will add to the performance in Q3, but I think after this pent-up demand fades away, demand is going to normalize, and therefore you could see some bit of softening on the top line, maybe in the Q4 onwards or Q1 onwards FY24.
Well, something like alcohol, it doesn't really work on a pent-up demand thing. I think it's
But it has recently. I mean, look at the amount of people that are just going out to places like Goa. I mean, Goa, travel in off-season has been...
Travel and alcohol are two different things. But anyway, we're running out of time here, so let's quickly move on to the second one.
Well, my last talk of the day, Santo, today is from the broking space, and that is Angelone. We had a very strong, update for the second quarter, and clearly that has now relayed into the earnings as well. The stock is likely to see a very strong start, in my opinion, Santo, given the strong earnings growth we have seen in Q2. If you look at the net profit, yes, year on year, I'm keeping it aside, but even on a sequential basis, 18% jump in net profit for the company in the second quarter, led by a very, very strong user addition in this quarter. Apart from that, the fact that company has raised its dividend, Santo, I think that is also going to boost confidence, given the fact that the stock has seen a major correction in 2022 so far. And therefore, given these earnings and given that stock correction, I feel the risk reward right now has become a lot attractive for investors who are looking to play the long game as far as Angelone is concerned.
Well, I'm a bit surprised by the numbers here, positively surprised, I would say, that given the sharp drop in trading volumes during the second quarter, I would have thought that typically the company might see both a decrease in top line as well as bottom line.
I think, Santo, the company has been gaining market share. I think that is what has changed the picture for them.
Possibly, that could be one reason. But that said, CJ, I'm a little skeptical about this volatility, which is holding back many retail investors. Retail is the biggest clientele for a player like Angelone, and if the market continues to remain this volatile, very likely that you'll see a lot of retail players opting out, and that in turn could affect the earnings of the company going forward. I would still watch for that 2,000 rupee level, which has been a kind of the all-time high for Angelone, which it made in April this year. If it's able to break past that, then probably I would say that yes, the bull trend in the stock is still very much intact.
And Santo, which is the next stock on your list?
Well, the next stock on my list is Blue Dart. Now, Nuvama Institutional Equities had hosted the Blue Dart management, and they've come out with a report on Blue Dart. They're positive on the stock, and they have a buy target in excess, buy rating on the stock with the price target in excess of 10,000 rupees. Now, key arguments for Nuvama is that the company has now managed to increase revenues from its e-commerce segment. We'll quickly take a look at the market before we get back to it. Very strong opening there for the Nifty, up over 300 points, which is what the SGX Nifty was anyway indicating. And market breadth was amazing. 1,800 stocks up and less than 100 stocks down on the NSE at this point.
Yeah, Santo, and I think clearly we are at that resistance level of about 17,350 at this point of time. It'll be very interesting to see if we can break past it. It doesn't seem like we are making an effort to break past that resistance zone of 17,350. But if we do, then I think that is when a lot of long position or positional traders who generally try to play on the long side will try to get into the game. But if you look at the mid-cap and small-cap space, really very strong start. The Nifty mid-cap 100 up by about 1.4%. The Nifty small-cap 100 index higher by about 1.6% at this point of time. And clearly the banking stocks are leading sectorally. The Nifty Bank now higher by about 2.2%.
Well, and let's get back to stocks on the watch list. Well, with Blue Dart Express, according to Nuvama, the share of its revenues from the e-commerce segment, it's now about 25%. It's managed to increase that well. Now, it was only 2017 that Blue Dart Express decided to really expand its ground express operations, and that appears to be paying off quite well at this point in time. It's been able to compete aggressively with other existing players and also improve its share in the e-commerce segment, which is the fast growing segment. Besides that, after a very long time, Blue Dart is planning to add 2 more aircraft, which shows it kind of indicates a bullish outlook. And also Blue Dart has been able to pass on costs, higher costs arising from higher increased fuel prices onto its customers because of strong brand name. The earnings growth has been pretty consistent. It's been able to maintain its margins. So this is clearly one of the star performers if you're bullish on the logistics sector.
Well, Santo, clearly it is difficult to make an argument against Blue Dart at this point of time. But the only thing that probably I would be a little cautious about is the fact that sequentially going ahead, given that the festive period will now end in this month, there could be a little bit of softening as far as demand is concerned for logistical services, especially on the e-commerce side, because usually for e-commerce companies, the festive season, September and October, has been very, very strong. If you look at some of the numbers that have been coming out from companies like Flipkart and Amazon. Apart from that, one important point that brokers from Nirmal Bang Equities made in their preview note for logistics sector is the fact that there is still a lot of supply side issues that are plaguing the sector, especially in terms of container shortages, container prices being quite high. And I think that possibly could start weighing on margins going ahead. Yes, so far the company has been able to pass on the cost, but ultimately there is always a tipping point and there is always a breaking point. And the company will have to make a choice between ensuring that it continues to gain market share or sustain the top line momentum maybe at the cost of profitability. So that is something to watch out for, not particularly a negative, but something to really keep an eye out on as far as MindTree's Blue Dart is concerned.
The last stock on a watch list this morning is MindTree. Now, CJ, a good set of numbers there, but again the company has sounded quite cautious, and among the key takeaways from the commentary, one is that some of its annuity and transformation deals have ended during the first quarter, and the clients are taking little time to decide on renewing those deals. So that is one of the negatives. The other one is that in Europe, basically there is clear some kind of delay in decision making from most of its European clients as well. But the most important thing here, CJ, is that with the swap ratio already announced with LTI, L&T Infotech, it's very hard to take a standalone call on MindTree, even if the company does well. That's because all said and done, if L&T Infotech shares remain where they are, then you're not really going to get much of a benefit out of that. So there's no upside really. In fact, you would stand to lose money if LT Infotech shares underperform and MindTree shares increase. So that is something I feel, CJ, could keep a cap on the stock in the short term.
Well, Santo, truly for the benefit of MindTree investors, one will hope that LTI's performance also reflects a very, very strong performance for the stock going ahead. But if I come back to MindTree, Santo, particularly, I feel that maybe the market could be a little bit more benign today in terms of if you look at the reaction to the earnings, because the earnings performance has been very, very robust for a company and for a sector which had been down and out throughout this year. If you look at it, from in terms of the stock performance. The company's earnings were largely a beat on almost every parameter that you can talk about. You talk about top line, you talk about the bottom line, or you talk about the margins. The company did well on all those three fronts. Apart from that, this deal pipeline that was quite strong for MindTree, especially given the fact that the delays in terms of renewals. The deal pipeline was still very strong, so that it only goes to suggest that if those renewals also come through in Europe, I think then next quarter also you could expect a very, very strong deal pipeline from the company. And the resilience and margins that MindTree has shown, Santo, I think that is something that probably could make the market give the company a higher multiple. Already there is talk that, of course, when the merger does happen, the big five in IT will become a big six because of MindTree and LTI's revenue potential going ahead. So therefore, with all eyes now on the merger with LTI, I think this is one stock to keep an eye out on, given the resilience that the earnings are showing at this point of time.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it. Please do let me know your comments in the feedback section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a spectacular trading day.